let's get this thing out there. What's up, Ape Nation? Let me know if you guys can hear me at the moment. Good morning, good evening, everybody. It's Marcel Klinovic, Boss Blunts here, and we've got some nuts things happening today. Excuse me while I crack a drink, pop a beer. What's up, Ape Nation? How's everybody? Let's. I haven't had a chance to put this out there anywhere really, so I'm gonna just share it real quick on Twitter. We'll get started in like 5 minutes. I'm gonna get everything together here for you guys. I'm almost done. I just gotta roll up another baggie. So you guys are gonna have to bear with me 5 minutes. My apologies. I just got the kids to bed. It's been a long day, long weekend, and I am so pumped for tomorrow. See what we got going on here. All right. Let me shut down this music I got going on in the background here. And I like the stock too. All right, thanks for coming, everybody. The Truth, Manny, Truck, Billy, Bavash, Firefly, Alexander, Brenda. Thank you all so much for coming. We're gonna give people just a couple more minutes to come in here, okay? And yeah, I'm feeling the same way. Tomorrow could not come any faster. But before it did, I felt that you guys might want to know some information. So I'm gonna share it with you here in just a couple minutes. Oh, let's go. Now, 1 second, I'm gonna mute this microphone. All right, mic check. Seems like it's working all right. Oh, let's go. Let me just turn off this background BS. Excuse me. And that's not cooperating. What's up, everybody? You guys remember this? It's a unseen margin call from the end of July, in which all of Citadels holdings tanked in the after hours, and they tried to. Some people try to blame it on, you know, Amazon having bad earnings, but their earnings were not bad at all. Their earnings were actually positive. They made $25 billion more quarter over quarter. So, where's this shit at? All right. Braxton Warren, thank you very much. Buku bucks, we're going to be goddamn fucking rich. Simple as that, quote unquote, boss blunts. I don't remember saying that, but that definitely sounds like something I would say. Jay Passarella, Leiden Eagles. Wow. Yeah, that's my high school. That's cool. John Curtis, Jonathan, thank you guys for showing up. What's up, John? Thank you guys for showing out. Check this out if you guys didn't see this here. Back then, Amazon's droppings tanked because Citadel got margin called. This is their #1 holding. Down almost 8%. Check out their top 50 holdings. Facebook, Amazon, Apple, Microsoft, Baidu, NVIDIA, Adobe, Comcast, Google, etc. Microsoft, what happened that day? Not a whole lot at the moment, but it started tanking and just kept going down. Let's see, Baidu down 1.86% as well. These guys trying to capture some liquidity to short these stocks a little bit more. NVIDIA down almost 2% for no reason again, all because it was Citadel's top. And the coup de grace, Pinterest was down almost 20%. Oh, look at that. Does that look like one person sold that to you, or does that look like institutional selling? You tell me. I mean, you don't have to be a professional trader to figure that out in the after hours. Nice. Passarella, I'm glad to hear that. No, thank you guys for coming out and showing out. Appreciate all the support. Thank you very much, Silhouette. Lamborghini says it sucks that Lamborghini takes 8 to 9 months for delivery. I hear you. Thank you guys. Appreciate all the love here. Well, yeah, just bringing us through that. And we've all seen this before here. Janet Yellen told us this way back on August 1st. That it was prepared to pay off the country's bills starting on August 2nd using extraordinary measures. All right, we've seen it before. Her clearly say that failure to meet these obligations would cause irreparable harm to the United States economy and the livelihoods of Americans. All Americans, you know. She noted that raising the debt ceiling doesn't promote more federal spending. It only authorizes the government to pay what it already owes. And with this, with everything that's going on right now, for example, Hurricane Ida, like, this is not good. How are they going to pay FEMA to help these people in New Orleans? You know, really? How's that going to come down? I don't understand what they plan to do. As this is ridiculous. Check this out. Look at New Orleans, guys. This is what New Orleans looks like right now. Or should I say a few hours ago when this person was taking this video. Hurricane Ida is completely destroying things. And it's gonna continue throughout the entire country. It's gonna go northeast in a path all throughout the eastern coast and the actual inland. It's gonna be going through Ohio even all the way up to New Jersey. Kyle Cooper wants me to start an OnlyFans. No thanks, brother. But I appreciate it. Starring Eli, Hung, Didi, Silverback, all you guys. Jonathan, thanks so much for coming. Appreciate the hell out of you guys and gals. But yeah, this is exactly what we're looking at right now. You know, the stop sign is almost completely submerged. That's somebody's chimney that you're looking at right there. How is FEMA going to get the money to pay for this? Where are they going to get this from? Want to see why this is a big deal, you guys? Let me pause this video here. What do we have here? This is the United States Daily Treasury Statement. This right here tells you exactly how much money our country has every single day. And as of right now, we have a whopping $239 billion. It's expressed in millions. So 239,000 millions is $239 billion. Damn, that's it for the federal government, who printed 33% of all money in existence last year, 2020? How come we only have $240,000? Not even, under $240,000. Check this out. Where were we at the beginning of this fiscal year? 1.78 trillion. At the beginning of this year, the Treasury had 1.78 trillion. This month, they had 459 billion. Today, we started with 258 billion. Spent almost 20 billion. And we do not have an agreement on the debt ceiling. Okay, this has been halted. They cannot spend any more money. They cannot spend any more money, and they will not do so until they've come to an agreement. So, we are in some crazy shit that is about to happen, and nobody knows about it yet. Nobody is actually aware enough to see what's going on. And how do I know it's going to default, Blue? Dean, hello everybody, thank you for coming. I'm about to explain exactly how I know it's going to default. You see all these wonderful yellow, white days here? Everything in August that's white, all these white days here, even these green and red days. These are all the days off for Congress. Congress went on vacation starting on the 30th of June, and they come back on the 20th of September. Kershaw, Vlad, thank you guys for coming, everybody. Appreciate all you. Now, I've got an interesting piece of information that I'm holding on the side here for you that I will show you in a moment, but I really want you to sink that in right there. Because this is how much we're spending currently. About an average of $20 billion a day. And today's August 29th, Sunday. Tomorrow, well, as of this actual recording, and as of the 30th, we'll still have 1, 2, 3 full weeks and a weekend on top of that. So just under a month before Congress actually comes back. Comes back from their wonderfully long vacation. Wouldn't you guys like to have 7 weeks off? Man, that'd be fucking sweet, huh? I'll give you guys a minute to catch up. Feel free to review this table. Yeah, we've got some rough maths here for you guys. It's pretty easy stuff. Yeah, the United States Treasury has clearly stated that they have no idea how long it's going to be before this actually gets crazy. And I think I have a feeling I know exactly when we're going to default on our debt. And the government will probably shut down as well, much before October 1st. We're not going to make it to October before the government defaults on its debt. I can guarantee you that from my current estimations. As some of you guys already know, and in case you don't, I'm going to briefly run through this. A 2-year deal to suspend the debt ceiling lapsed midnight, July 31st, following an action from Congress and Biden to give the U.S. more borrowing authority. The Treasury Department will begin taking what it refers to as extraordinary measures to prevent the U.S. from defaulting on its debt. That means we're pushing off pension plans, 401ks, hospital bills, doctors' bills, schools funding, military police, firefighters. The list goes on. FEMA. You guys remember what we just mentioned about FEMA, right? And why we need them? How are we going to authorize more money for emergency relief? Where's the emergency relief money going to come from if the government cannot spend any more money? Okay. Republican leaders have told Democrats there can be no bipartisan debt ceiling agreement without a slate of debt reduction measures targeting the $28 billion national debt. It's over $28 billion at this point. And not just several. Now, as of today, August 28th, 29th, there are 46 Republicans, congressmen, who have specifically stated outright that they will not support this infrastructure bill. 46 Republicans, I don't care who it is, if they're a Democrat or Republican, but it's just a fact. 46 Republicans have stated that they will not go along with the Democrats in passing this infrastructure bill. So they would have to do it with support from all 50 of the Senate. And we all know that's not going to effing happen. That's not going to effing happen. No freaking way. Pedro, not only do I look up Charlie's vids, I used to watch him religiously. Charlie and I speak regularly, almost daily, because we do a lot of due diligence. We bounce each other's ideas off of each other and due diligence, and I ask him for advice, and we ask each other, not just I and him. A big group of us in Discord are genuinely working together every single day to share information and decipher information so that we can come out here and show it to you guys because of how important it is. I would rather put it on Reddit and not be making YouTube videos, but this is the way that most people like to digest this information. Yeah, it's all about Salomon Brothers. Yeah, Salomon Brothers owned, which is now owned by Citigroup, who we just saw in the last video regarding the Brazilian depository receipts, the BDRs, that are 100%, 513 million synthetic shares down in Brazil. And I proved that in the last video without a shadow of a doubt as well. We're going to see here, hold on one second. No, in response to your chat question. There's all sorts of issues going on around the world, and these things are being shorted very heavily through these BDRs as well as other ETFs that are worldwide. Some people like to say that there's not a lot of exchange-traded funds that hold GameStop and AMC together, but that's not the case. They think that they're in different sectors, that they cannot be in the same ETF, but that's a downright false lie because they don't know better. So if you go and look on Charlie's vids on YouTube, he will clearly explain multiple, including one by the name of XTSLA, an ETF which contains both AMC and GME as their top two holdings. David, thanks for coming out. Dean, all you guys and gals, appreciate you. So now anyways, we're here. So we already know about the Democrats and the Republicans are not going to agree on this thing. All right. And how much time do we have yet left here? Previously, they were saying that the Treasury would run out of cash before October 1st, most likely in October or November. And SIBO was wrong because SIBO is always wrong. SIBO is consistently wrong day after day. Let me just adjust this a little bit. So they thought that we were going to be able to make it through October or November before we had to worry about the debt ceiling issues. And then they're come out and projecting and saying that the timing and size of revenue collections and outlays over the coming months could differ noticeably from SIBO's projections. Therefore, the extraordinary measures could be exhausted and the Treasury could run out of cash either earlier or later. So here they're saying that they think it could happen anytime sooner. And then Yellen comes out and says, uncertainty driven by the coronavirus pandemic and the federal government's fiscal response has made it harder to pin down exactly how long the U.S. could avoid default. Yellen states specifically that the U.S. could run out of extraordinary measures by September, soon after Congress returns from recess. But the reason this is important is because she also tells us that, I'll find it for you here so you can read it for yourself, but she also tells us that because of the changes here, they're telling us, here she's stating that they could run out of extraordinary measures money by September, soon after Congress returns, which means the U.S. could possibly default on its debt for the first time in history. But where things get crazy is that we're not going to make it until then. We don't have enough money. That's why only 6% of all money provided by the U.S. government for rent relief for the eviction moratorium has actually been sent out. And it all goes towards our GDP. All this money, this $90 billion that they allocated towards our GDP and said that it's counted on there, only 6% of it has actually been sent out. So under $5 billion out of the $90 billion that was allocated. Because the U.S. Treasury does not have enough money. They're putting things off left and right. See, so let me go straight back to what Yellen is discussing. What we're looking at here. That says right there clearly the daily Treasury Statement for August 26th. This is the most recent one available. The one for Friday is not available on the Treasury's website yet. Okay, you can see where it's at right here. It's from fsapps.fiscal.treasury.gov. All right, you can go there and look for it yourself. Be real. The moon's sooner than you think. Blue, all you guys, thank you for coming out. Look at this. And I'm going to tell you actually that the moon is sooner than you guys all expect. This is going to be a fun ride. This is all by speculation, and nothing is for sure until it actually happens. But, let me show you something. I got some great information from my buddy on Reddit who did some extremely extensive due diligence. I've put it together with some other details that we've received, and this is how we're coming up to this conclusion. I would rather put this out so you guys can see it directly from him, but I don't think I'm going to be able to do so because of the way that YouTube and Twitter work. So I'll explain this quite simply. The United States has $240 billion left. They're spending between $19 billion and $26 billion a day, every single day, from as of August 1st. So if you average that out right in the middle, that comes out to 23. That gives us 10.4 days of the United States Treasury paying bills before they run completely out of money. The United States Treasury has between 9 days, if they spend $26 billion a day on average, to 13 days if they spend $19 billion on average. So anywhere between there. We're looking at 9 to 13 business days before the United States Treasury runs completely out of money. And that's if nothing changes. We just had a hurricane hit New Orleans. A big hurricane, like big, okay? This is big. That's not a small amount of water. This is FEMA needs to come save millions of people. Homes are not going to be insured for as much as it actually costs to rebuild. Thousands of people, millions of people possibly, will not be able to rebuild their homes with their insurance money. The insurance money that you get, unless you have 100% coverage to rebuild from one of these massive situations here, a act of God, you could say, that's what they're called, you are probably underinsured on your home. And that's what's going on over here in New Orleans. These people are going to be stuck, stranded without food and water and electricity, and FEMA cannot help them. It's going to cost the U.S. Treasury a ton of money to give to FEMA and the military for certain supplies. Then we've got to get these supplies down there, so there's going to be more supply chain strains. The electronic log, the ELD regulations that are currently in place for trucking are going to go out the window. They go out the window every single time that there's a tragedy like this. Okay, so what does that mean? That you're going to have truckers driving out there for 24 hours straight, 48 hours straight, without sleep, without stopping except for fill up their 200-gallon gas tank. Because we're going to need to get water, supplies, emergency stuff over here, anything you could imagine, medical supplies. And we already have a massive truck driver shortage. You know, this is a big problem, and it's going to accelerate these 9 to 13 days that I imagine that we've got. Now, Gio, let me mute this really quickly. Kind of get it out of the way. So yeah, take a look at what our Treasury has. $240 billion. It's right here. Okay, it's right here. This is what our Treasury's got. This is how much we had at the beginning of the year. This is how much we had at the beginning of this month. And we're about to be broke in the next 9 to 13 days. I give it 9, maybe less, because FEMA, because of the emergency relief. We already have it allocated. Look at this here. Coronavirus relief, it's here. Okay? Corporation for Public Broadcasting hasn't been getting paid. Whatever, who gives a shit about that? But that's an example, you know. The Commodity Futures and Trading Commission, these are the assholes that are in charge of those certificates in Brazil that are comprised of 100% synthetic shares that we covered in yesterday's video. That is 100% proof that 513 million synthetic shares in AMC exist in Brazil, and Citigroup is supposed to hold 513 million shares in their accounts at all times, and we proved in yesterday's video they only hold 61,000. So as you can see here, the CFTC, the assholes that are regulating that, have not gotten paid either. Okay? This is our public debt cash issues table. This is one of the ones that the government has to continue to keep paying, because if they default on our debt to other countries, which is going to happen soon, they're going to be really pissed, and we're going to have a lot of problems. We're looking at 10 days before the Treasury's broke. 9 to 13 days tops, my opinion. Why? Again, if you haven't figured this out, Thursday, August 26th, we had this much money. Earlier in that day, we had this much money. It shows you we're spending around $20 billion every single day. That's what we had at the beginning of the month. And it doesn't take a whole lot of calculating to come up with this. 240 billion divided by an average of 23 billion a day, and between 19 and 26 billion, that's 10.4. So you're looking at 9 days to 13 days before the United States Treasury defaults on its debt. Excuse me. These guys aren't coming back till the 20th. All right? It's Congress. The purple days are the days that both the House, the Senate and Congress are all in session. Z-Flock asks, only 20 billion? Yeah, but that's actually a lot of money, because that's the money that they're spending every single day just to pay the bills. And the majority of that goes to paying interest to other countries. So today's August 29th. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days, business days, would be September 10th. Congress doesn't come back till the 20th. I would say they're business days, Camille, because I can't see the government actually spending any money on the weekends. But even if not, if it is on the weekends, what's the difference? You know, we're still not going to make it till they come back, till they can actually vote on the infrastructure bill to raise the debt ceiling. Let's go with 14 days. So 11, 12, 13, 14. So even if it takes them 14 days, which is a day longer than we can calculate. So even if they cut spending and only spend $18 billion a day at the average rate that we're going at right now, on the low side, that is less than we're actually spending, because we're spending between $19 and $26 billion every single day. We're going to run out of money right here, anywhere between September 10th through September 15th. Congress doesn't come back until September 20th to start discussing the debt ceiling and infrastructure bills. This is big news. Are you all comprehending what is going to happen to our stock market? Are you guys understanding what is going to happen to our economy and our stock market, our real estate market, with this hurricane, with the eviction moratorium, with student loans need to be repaid, unemployment continuing to rise, inflation at 2008 levels and rising exponentially? We cannot print more money to get out of this problem. It will only cause inflation to rise further. That's why used autos are up 47%. American savings is down by 51% in the second quarter of 2021 because people are behind on their rent, mortgages, and other bills. We had $4.07 trillion at the beginning of 2021 in the first quarter. And as of the second quarter, we have lost more than half. Americans' savings and investment accounts have under $1.97 trillion. All of us. And with inflation at the rate that it's going an average of 5.4% a month for the last 3 months. The PCE is at 6.4%. You, me, and everybody watching this has to spend an average of $717 more a fucking month just to live the same lifestyle that we had 3 months ago. Does that sound like things are going good? Jason, Tankman, Silhouette, Delt, Yellram, all you guys and gals, thanks again for coming. I'm sorry if you missed part of the video. I'll be more than happy to touch over on this stuff again. There's a lot more that we got to talk about still, but just to put it plainly, if you're just showing up, the United States government has $240 billion left in the bank. We had earlier today, actually, yeah, this was on Thursday, they had 260. So actually, we have to account for the fact that Friday was a business day that I didn't take into account on this already. So here you go. This is why we do due diligence. Because Friday counted towards that. Friday the 27th counted towards one of those days. So we've got to count this again. 1, 2, 3, 4, 5, 6, 7, 8, 9. So the government will default any day between September 9th and September 14th. We just accelerated a day because we realized that we have this report from the U.S. Treasury for Thursday, August 26th. We did not get the Friday report yet, and Congress is not going to come back because they're spending 19 to 26 billion. They're not going to come back until the September 20th to discuss the infrastructure and debt ceiling bill. And they've got to discuss it. They're going to argue about this. They're going to fight over this bill like crazy. This is not going to be something that they just come to an agreement on and everything's hunky-dory. This is going to be a fight, a struggle over crypto, over the regulations, over the government spending, and everything else. So this is going to get super rushed because FEMA is going to need more money, more supplies, more funding to help people in New Orleans and the Gulf Coast. And so they're going to want to try to accelerate this. But even still, what happens when when we have debt ceiling issues? Check this out. Every time there's a debt ceiling issue, we have huge problems. This is part of the due diligence that we were doing on Reddit. It shows you the fiscal calendar, congressional calendar. The fiscal year begins on October 1st. So the government will shut down on October 1st at 12 a.m. Eastern time that morning. Now, what happened the last 2 times we had debt ceiling issues? Our government was reevaluated by these varying rating agencies, and our actual credit was dropped twice. First to Rating Watch negative, and then 2 days later from an A to an A minus. And we did not default on our debt at this time. We did not default on our debt in 2013, but we still lost 2 basis points on our fucking country's credit rating. And in 2013, while lawmakers and Obama came to an agreement between September 19th through October 9th, see that? The S&P 500 moved below the 50-day moving average. The SPY lost 5.2%. Right? And in 2011, when we had the same shit happen, the Dow Jones plunged in one day, $2.5 trillion from global equity was just wiped out. The S&P 500 lost 6.7%. Almost 7% of the entire S&P was lost that day, and all 500 stocks fell for the first time. All 500 stocks plummeted. What happens when this kind of liquidity dries up? What happens to market makers and banks that are over leveraged to the tune of $189 trillion? What happens when their derivatives are so much that it is 5 times the world's GDP, not including naked shorts, not including synthetic shares, not including FTDs and shorts marked as long that have not been reported? Where do you guys think the market makers, the hedge funds, and a lot of these prime brokers are going to end up? In fucking bankruptcy, right along with a good portion of these banks. It's going to lead directly to the mother of all short squeezes. This is a 48-page report that is released every quarter by the Office of the Comptroller of the Currency. This is the first quarter report because we have not yet received the second quarter report, but that doesn't mean shit. These numbers are expressed in millions of dollars, but this is 3 million millions. Okay, so that's $3 trillion. And this is 52 million millions, so that's $52 trillion. So as you can see here, JP Morgan has about $3.2 trillion in assets and $53 trillion in derivatives unrealized losses. Right here. 53. And same goes for Goldman Sachs. They're right behind them. Right behind them. Look at this. And they got 50 trillion. And they've got even less assets and the same amount of derivatives. Citibank, these assholes, Citibank, they have the 513 synthetic shares that they're holding as certificates in Brazil. They're not really holding them, as you saw yesterday's video. They only have 61.4 thousand. Citigroup has 61.4 thousand out of the 513 million shares that they're supposed to have in their asset, in their books right now, according to their agreement with Banco do Brasil, B3, the Brazilian government, and the CTFC, these assholes that have been put in place to manage the overseas futures market and derivatives market. Citibank has 1.6 trillion in assets and 46 trillion in derivatives unrealized losses. How the fuck are they going to pay for our 513 million BDRs? The Brazilian depositary receipts. I'm sorry, 3.08 million BDRs, because there's 6 of those, because it's a translation between the Brazilian real to the American US dollar. So it's a 6-to-1. And so their agreement states that they have to buy these all back. What's that going to do to Citibank when all of these, when we have issues like this with the S&P losing 7%, when we lose $2.5 trillion a day from the Dow? And it's not just going to be a couple of days, because as you can see here, from September 19th through October 9th, the S&P 500 moved below the 50-day moving average. And that's while they were arguing this shit in 2013. It took them that long, from the 19th through the 9th. And we already deduced that the United States Treasury isn't going to make it that fucking long. They're not even going to come close. The United States Treasury has $240 billion in the bank. Sorry, that was on Thursday. We got to subtract 20 billion more, because on Friday they have spent between 19 to 26 billion. That's what they've spent every single day on average since August 1st of this year, when the debt ceiling extraordinary measures began. Raul, assets means how much money you have. And derivatives are contracts that are out in the market that have a negative value attached to them. The only difference is they're unrealized for now. When do these derivatives become realized? When a giant market correction, a real estate market correction, stock market correction, or other economic downturn happens, many people, such as ourselves, sell our stocks in anticipation of these issues, because we know that the government and all these other folks are going to do the exact same thing, and we don't want to get caught. We don't want to be left holding the bag. What happens? This is what happens when the stock price drops. Remember that Twitter I showed you earlier? Let me pull that up for you. There's a reason I have it pinned to my page right now, because I wanted people to take a look at it and remember what happens. What happens when a company needs liquidity? They sell their positions. Like Citadels' top 2 holdings, at first, I realized Amazon and Facebook were seeing massive sell-offs after hours on the 29th. But Amazon had increased their quarter-over-quarter profits by $25 billion, which is equivalent to a 27% increase for them for those exact numbers for that most recent earnings report. Now, I don't know about you, but I sure as hell didn't go and sell off my Amazon at 7:45 p.m. because that's what happened. It was 6:30. It was 6:32 p.m. Central Time, and they were down 7.21%, around $260 a share. If you heard that Amazon had made $25 billion, which is 27% more this quarter than last, would you have sold your Amazon? Let me hear you guys in the chat. What do you guys think? No sell. Of course not. No, dude. Hell no. Everybody's just blowing up the chat right now. Why? Because you're right. You're absolutely right. Who the fuck would sell Amazon after they just increase their quarter-over-quarter profits? I'm not talking, revenue, but still it's equivalent to their profits because Amazon makes fantastic profit margins. Okay, so that's a 27% increase in quarter-over-quarter. Let's go to the next example. Oh, it's in the same thread. Sorry. What happens when Citadel and other market makers, hedge funds, and banks need money? They start selling off their top holdings. As you can see, Facebook was almost 1% of their portfolio. It was their top holding at the time. Amazon, Apple, Microsoft, Nvidia, these were all following closely behind, as well as Pinterest a little further down the line. Microsoft started seeing immediate sell-offs, and they had a great day. But and all of this is all after hours. All of this is after hours. And sure, that doesn't seem like a lot right there, but it continued on all the way until 8 p.m. What happened with BDU? They were also sold off hard in the after hours, and they didn't have an earnings report. Their earnings were expected on August 12th. This occurred on July 31st. Pedro, I have to disagree with you. Amazon did very well. I looked it up, my friend. They did not meet their exact earnings estimate, but that doesn't change the fact that they still made $25 billion more this quarter than they did the last quarter. That's 27% quarter-over-quarter increase, my friend. 27% increase. That is massive for a corporation. Massive. Matt, thank you, brother. But no, I look up to all of you guys. I appreciate the hell out of all of you guys, and I thank you. And you're the reason that I'm here. Look at what happened. What happens when market makers and hedge funds go through these issues and are going to have to? What are they going to do when their assets are tanking? What are they going to do when they need more liquidity to maintain their margin positions because they've overshorted these stocks so much that they're $190 trillion in the hole? Okay, our government's got $220 billion left because this was from Thursday. And as of Friday, they have 20 billion less. So as of Friday, they actually had 220 billion. 220 billion. You divide that by the average of 23 billion per day that they've been spending. We've got 9.56 days. So we've got anywhere between 9 to 13 days tops before the United States government defaults on their debt. We know Congress is gone still, right? I know I keep bringing it up, but Congress is not fucking coming back to the 20th. That puts us, we're going to run out of money. The United States is going to default on their debt either September 9th, 10th, 13th, 14th. Somewhere between the 9th through the 14th. 9th, 10th, 13th, 14th. That's going to cause the stock market to crash. That's going to cause people like these assholes to start selling off their positions so that they can leave retail holding the bag. And then another hedge fund will do the same. Now, because they've got $189 trillion in derivative liabilities, they're going to have to start. They're going to get margin called. All right? Look at this sell-off. They sold off almost 20% of Pinterest in a fucking heartbeat. And sure, Pinterest had some kind of rough earnings, but this was one institutional seller. All right? This was one big, massive seller here. And the rest of this might have been FOMO selling out of fear that it was going to continue to drop. But it didn't. It had a nice upturn the next day from other institutions that picked it up. Oliver, absolutely. I'll have a premiere time tomorrow for the morning. Basically, I'm saying hedgies are fucked. Hedgies are fucked. They can't keep up with this. We're going to default on this debt. We only have $220 billion left. We've only got a handful of days. We'll be back. These are our key dates here right now. 9, 10, 13, 14. Anywhere between these, in this period here, the government will default on its debt. But they don't come back to start talking about the infrastructure bill and the debt ceiling until the 20th. So for all these weeks, we're probably not going to see anything happen with the infrastructure bill. Let me pull back this other one so we can continue. This is what happens. This is how long it took in 2013. September 19th to October 9th. Right? We're going to default on our debt from the 9th. the 9th through the 14th. We're not going to make it any further. The numbers don't add up. There's only so many things that Janet Yellen can stop from paying. If she doesn't pay our debt to other nations, the interest debt, that's an automatic default. We've defaulted them. So she's going to continue to do so until it's completely dried up. And the last time this happened, we had a little standoff over here with the Obama administration, and Obama had to pull some strings and twist people's arms to make this shit happen. He had to go around them. They didn't even come to an agreement in the end. So let's keep moving on. These 4 banks, JP Morgan, holy shit, sorry. JP Morgan, Bank of America, Citibank, and Goldman Sachs. These are the top 4 banks. And they hold 89% of this $189 trillion in losses out of these 1,385 commercial banks and savings associations that are able to trade in this derivatives market because they're so over-leveraged. I've proven that to you with this quarterly derivatives report. These numbers don't lie. And if you don't like numbers because they're too hard to read, let's look at some pretty graphs. Okay? Like, they've all sorts of shit that proves how bad these are. Look at the notional amounts of contracts increasing over and over and over. Look at 08. This is how bad things were in 2008 when we crashed. And look at where we're at now, guys. Look at this. Look at how much precious metals they're buying, 2021. Okay? Look at how much precious metals they were buying in 2008. Check this out. Gold, 2021. 2007, 8, 9. Pretty flat, right? Even in 09, it was pretty flat. But now, looks like after the 2011 market crash, the 2013 market crash, they're like starting to step it up. Like, hey guys, we need to start fucking playing this a little bit smarter. What happened after the 2020 market crash? They did it again. And we're going to see another fucking hardy jump up on the precious metals that they're investing in. And we already have. I've got some other proofs on that. Trading revenue. Why was this trading revenue up so much? Money that the Federal Reserve was printing. That's why it's up so high. And that's caused inflation. And cars to go up 47%. And our food and grocery to go up 8% and 12% and so on. All right, so let's not dwell too much on this here. Let's move right on to the MOASS information. Here you go. Here, nice, beautiful, pretty graph. Orange is what this entire graph is the total banks, what they owe, around 190 trillion, not including FTDs. I can't stress that enough. This 190 trillion does not include naked shorts. So you got to add more for naked shorts. And it does not include shorts that are marked as long. So that takes assets and makes them a liability. Because when they a long position is an asset. It's a call. It's a share. A short position is a put. It's a sell of a share. So they're taking these short positions, hitting a different button on their keyboard like this, just one little button, and it's being marked as a long. So now you've got to add more because they're actually cooking the books. So these assets are not really assets. A lot of them are liabilities. So they need to be moved from their assets, deducted, and brought straight over to this fucking table down here and added onto the end of this. As well as the FTDs, the failures to deliver that have not been reported. That has to be added here as well. So do you see how this compound... Oh, wait a minute. Did I forget about the Brazilian BDRs? The Brazilian certificates that we showed in yesterday's video or 2 days ago video about the Citibank owes 513 million shares of AMC to Banco do Brasil. That's their agreement. That's the regulation. It's in the law. It's in the yesterday's video. I spent 45 minutes talking about it, so I won't go in further depth. You can go look that up if you want after this. That's 513 million synthetic shares guaranteed, and I have seen with my own very eyes 3.5 billion more that I'm going to bring to you in further videos. I have 3.5 billion more AMC synthetic shares to fucking show you guys. The same way that Brazil is holding these certificates of BDRs, where that is 6 BDRs for every one share that Citigroup has to maintain on their asset books at all times. That is the same thing in these other countries, except they're slightly differently worded and put together in a different mousetrap. GME and AMC are going to absolutely rock the fucking world, and it's at the fault of it's not their fault. It's the fault of these hedge funds, banks, and market makers that got so greedy that they over leveraged 100 to 1 I didn't make these numbers up. This is the fucking report from the Office of the Comptroller of the Currency.gov. Go look for it. All right. JP Morgan, 3 trillion in assets, 52 trillion in unrealized losses. And if you guys know, any of you that know about the futures trading cycles, the 3-month cycles with a 2-week short time period that we're in right now, that is going to occur from Monday through September 9th. Monday through September 9th. Okay. Tomorrow, August 30th through September 9th are super fucking bullish. We're going to be seeing some massive, beautiful futures cycles contracts being returned and bought and rolled over. So they're going to have to buy in and buy back these futures contracts again and roll them over for the next 3 months period. That's how they've been doing it since 2013, 2011, and 2008 and sooner. GameStop and AMC have been being shorted for 5 to 10 years or more without a doubt. Without a doubt. That's how we get to these numbers. That's how JP Morgan can have 53 trillion in losses and only $3 trillion in assets. That's how Goldman Sachs can have 51 trillion in derivatives unrealized losses right now and only $288 billion in fucking assets. What a joke. So as we've seen here, we've got a hurricane taking out parts of our country. You know, FEMA needs to spend money and the U.S. Treasury needs to spend money to save these people. Janet Yellen has told us time after time when we're going to run out of money, but the truth is here. The truth is here. I got the report for you guys. And that's why I brought it to you. You know, because these 4 banks hold 89% of all the unrealized losses. 89%. Okay, this is crazy numbers. Let me show you a little further down. Sorry, let me keep going. This table's last forever. Top 25, they have 187 trillion. We'll go down one more table. Okay, sorry, one more. This is a 48-page document. Bear with me. Here you go. The top 4 banks with derivatives only have let's say they have $7.5 trillion. These guys have $7.5 trillion in assets and $168 trillion in unrealized derivatives losses. This is criminal. So yeah. I don't know how much more you need to see. This was Thursday's table. You got to subtract 20 billion more. So that's $220 billion that the United States Treasury had on Friday, August 27th, I believe it was. The United States will default on its debt between September 9th between September 9th and September 14th. Hang on one second, guys. So I can take some questions if anybody's got questions here, because I've been talking and I know that some of you have seen the whole video, some of you have not. I can see the average watch time here is about 16 minutes. So I know that some of you have not seen the whole thing, and that's okay. This means the floor is higher than we ever expected. Okay? This is key every fucking Friday. We have not seen this week's. I did not look up this last Friday's. Let's see what happens. How bad of a shape are they actually in now? Friday, August 27th, 2021. Let's take a look. How much of an increase did we have this week? Because we looked at last week's as well. And these are exponential losses. We'll go to table 2 out of 11. There's 11 tables expressed on these, and all of them hold within trillions and trillions of dollars of losses. It's ridiculous. It's crazy. And it's exponential It's grown. Back in 99, they were complaining about $33 trillion in derivatives losses. And then we had the 2000 market crash. Back in 2011, we were complaining around $90 trillion in derivatives. And then we had the 2011 and 2013 market crashes. These are the same credit default swaps, super senior synthetic, collateralized debt obligations, mortgage-backed securities. Look at this. That's a $140 billion increase in 1 week. It's an $85 billion increase in liabilities in 1 week. But they've only increased their profit by $14 billion. So they made $14 billion more, but they lost $80 billion more on this table. That's table 3 of 11. You can't see the numbers? I'm so sorry. Maybe it's the definition. I apologize if it's telling me I've got an excellent connection, but I apologize if it's not super clear. I will try to zoom in a little bit. Let's see, which table are we on? I think we're on table 3 or 4. I think this is table 3 or 4 here. I think I've increased on this table. $91 billion in liabilities. That's losses, unrealized losses. $91 billion increase. But they've only made a profit. The residuals, assets minus liabilities. It's not a realized profit either. It's an unrealized profit, and this is an unrealized loss. But it's only increased their profit by $17 billion. So to make $17 billion, they had to lose $91 billion. Do you see how upside down shit is? The Department of Education is luckily still being funded. But as you can see, airline worker support has already been cut. Medicare, HHS, Medicare prescription drug payments have already been cut. There you go. This is what they've allocated so far. And you're going to tell me that all of a sudden this month they've only allocated 38 millions, is it? Yeah, rounded in millions. So they were doing 89.4 billion this year, and all of a sudden this month they've cut Medicare prescription drug for HHS coverage down to 38 million. What does that tell you guys? It's simple math, right? We have 220 billion left. They're spending between 19 to 26 billion every day. That's an average of 23 billion. That gives us 9.5 days on average. So between 9 to 13 days total we have before the United States defaults on their debt. The mother of all short squeeze will begin shortly after. Banks and hedge funds will get margin called. The new Phase 5 regulations require all hedge funds to have $250,000 in collateral. That's an increase of 25 times increase. So that's a 2,500% increase of what it used to be. It used to be 10K, now it's 250K per hedge fund. Holding companies, who holds holding companies? Citadel. Citadel owns a shitload of holding companies. So Citadel Citadel is going to lose a lot of fucking money, and that's why they got $500 million back from their deal with their $2 billion deal with Melvin Capital. Citadel borrowed Melvin Capital $500 million. $2 billion in January because they lost so much because of the GameStop debacle. And they have recently taken back $500 million while retaining their 3-year revenue share of all of Melvin Capital's revenue. But what fucking revenue? Because Melvin Capital is still down 43% from January to today. What is this? Holding companies. What's a holding company, guys? Oxford Dictionary tells us that it's a company created to buy and possess the shares of another company, which it then controls. Right? These banks and Citadel are moving their money to Brazil, to the Cayman Islands, overseas, the Caribbean, and that has increased 200%. Here's the year-over-year change for holding company trading revenue. Right here, total is up 199.7%. And of that, they have increased their credit derivatives, credit swaps, mortgage-backed securities, and all this shit. Super senior synthetic collateralized debt obligations, CDOs. That's up 1,600% for them. But then you got to add in the banks, because you got to remember the banks still have another 3,400%. So you take 3,400 and add 1,600. That's a 5,000% increase in these shitty mortgage-backed securities and credit default swaps. They've just moved around the tranches from 2008, restructured them, repackaged them, put them in Brazil, put them in the Cayman Islands, made synthetic shares, and pretended like everything was okay. And that's why they're going to fucking collapse any day now. The new requirements, how can they know? How do I know? How do I know that they're still going to be able to, that they're not going to be able to continue to do this? The new Phase 5 changes that are starting September 1st, 2021, okay? And September 3rd and September 20th and others October 1st, because it's a whole month of tons of new filings. All of these new changes are going to prevent Citadel from putting these assets and these liabilities offshore. They're not going to be able to put them in the Cayman Islands anymore and pretend like they don't belong to Citadel, because Citadel and Ken Griffin will still be and maintain the fiduciary control and ownership over these monies, assets, and liabilities, regardless of whether it's in buttfuck China or these places in the Caymans and Africa and all these other locations in London they like to stash them in. The reason that Kenny Griffin's been flying to Africa and stashing money over there is to keep things hidden, because there's no extradition in Africa. Gross positive and negative fair values have both been completely changing, increasing and decreasing on both sides. And their losses are increasing more than their gains. It's all exponential. $189 trillion in these guys. They're cooking the fucking books with these derivatives because they're marking the shorts as long. I could push A instead of B on my keyboard, and it would mark a short as a long position. So instead of a put, I would be telling the government, the IRS, and FINRA, and FinTel, and the SEC that it was actually a share that I purchased shares, when in reality I sold shares that I didn't own. That's what makes them synthetic. One of the things that makes them synthetic. The other thing would be, Citibank and whatnot not holding on to these shares that they're supposed to keep from these BDRs. Okay. So this is what's going on. They've got to spend this money. They've got to pay this money back one way or another. And we can see that Medicare is already paid. They've already cut this. They only spent $38 million this month. They've spent $38 million this month on Medicare prescription drugs. But in the whole rest of the year, they had already spent $89 billion because they cut Medicare first. What else did they cut? Let's see. Looks like unemployment assistance, FEMA, lost wages are down pretty hard. Oh, yeah, FEMA. Didn't we just talk about how we're going to need money for FEMA and that the government's not going to have money? Why is that? Why are we going to need money from FEMA, guys? What's going on in New Orleans? Hurricane Ida. It's going to travel up the whole coast, all the way up through Ohio, all the way up to New Jersey. What do you guys think? You got some questions for me? Throw me some questions, because I don't want to just ramble. I think it's pretty clear to all you guys. We're going to need money for FEMA. The government's already cut money for FEMA. I showed you right here. Federal Emergency Management Agency. Okay. Medicare spending, we already showed. Medicare spending was at 89 trillion this year. Sorry, 89 billion. And as of this month, because they're broke, they've only spent 38 million on Medicare prescription drugs for us, you and I and our families. They had $239 billion left. They had $239 billion left August 26th. And then on Friday, they spent 20 billion more. That left them 220 billion. And they're not coming back to start discussing it until September 20th. And then they're going to argue about the debt ceiling and the infrastructure bills for a few more weeks because they already did it. How long did they argue about it last time? I think I just showed you guys, but pop it right back over there for you if you want. %61.8% of all these banks' volume is being traded on dark pools right now, and things like Forex and foreign exchange are being traded 99% on this volume. 99%, guys. Okay. The fact is, these Federal Reserve's commercial banking assets liabilities for July and August have increased tremendously in the hundreds of trillions of dollars. Okay. Naked and synthetic shorts are never reported until hedge funds and market makers are forced to buy them back via a short squeeze or an NFT token dividend or cash dividend. The reason they short stock so hard is because when they put a company out of business like Toys R Us and Radio Shack, they no longer ever have to buy back all those shares or report those naked and synthetic shorts. So they get to keep all of that money that they made illegally off synthetic shares that were not real, that were sold 10 times the float, 20 times the float or more. They don't ever have to pay any capital gains taxes at all. 0%. 0%. The last time that lawmakers argued about this shit was in 2013, and it took them from September 19th through October 9th. And we're not even going to make it that fucking far. We already proved that our government's going to be defaulted on their debt between the 9th and the 14th for the first time in United States history. What the hell? The mother of all short squeezes is imminent. Is imminent. These guys are going to get margin called left and right between the new phase 5 requirements that hedge funds need to maintain 250K collateral. And on October 1st, all banks are going to be required to maintain $1 trillion apiece. $1 trillion. Can you say Marge is calling? Because I can. It's a federal DTCC. And I've got one more for you guys. You want to know who else is preparing for this shit? I got some more proof of how bad they're preparing for tomorrow. Because JP Morgan Chase just filed for some brand new companies because they needed additional help. Watch this. Give me 1 second. I'll pull this up on my Twitter. I would like to give mad credit out to the Great Beyond on Twitter, as well as Hang Loose Creations for the Brazilian depository receipts information and due diligence. These guys have worked extremely hard on a lot of things and have been incredibly helpful in explaining it to me and to working things out together. The Ape Nation community has been absolutely incredible. Let me pull this up. I'm almost there, guys. Just got to click these messages for you here. Wow. This is from the Depository Trust Company. And this is from JP Morgan Chase. Has just filed a brand new opening of businesses. Let's get this up here. Rename. I got to name it .jpg real quick. One second. Look at this. Look at this. This, my friends, this is some fucking crazy shit. JP Morgan Chase has opened 3 new pledgee accounts. And they did this in order to meet the requirements and the filings that are being implemented tomorrow. I'm sorry, not tomorrow. Not tomorrow. Tomorrow's not September 1st. There's a couple more days in August. My apologies. I might have said that once before in the video. But as of September 1st, there are a lot of brand new filings and Phase 5 regulations that need to be met. And that includes the way that depository trusts and pledgors are able to hold funds for each other. And you can see here, this was filed on August 27th, Friday, that effective with the opening of business on August 31st, 2021, JP Morgan Chase will activate the following pledgee accounts. All three of these pledgee accounts are going to be brand new. This is great news for Phase 5. Great fucking news, guys. Check this out. Let me know if you guys got questions. The DTCC has a $76 trillion insurance policy. And there's a lot of other insurance policies here that are going to help us out. And is this a Tesla squeeze or a Volkswagen squeeze? Neither. This is 10 times, 20 times what Tesla and Volkswagen could ever hope to be. Yeah, the Treasury is then, you guys know, if the DTCC does completely default, the United States Treasury and the Federal Reserve will start fucking printing out, and the fucking money printer will just go brrr, and they're gonna print out all sorts of money for the apes after this mother of all short squeezes. Because we see that they can't make it past September 9th through the 14th. They can't fucking make it. These banks are scrambling left and right. They're opening up new companies, new shell companies. They're recalling money that they borrowed out to Melvin Capital, Citadels, things like this are happening every single day. And they're going to come back on September 20th, and it's going to take them a long time. The last time that they talked about it, they went through till October 9th, and the 2013 Obama lawmakers tried to argue about this shit. So we're going to go on and on and on with margin call after margin call after margin call, one day after the next here. And we're going to be seeing, this squeeze might last 3 weeks. This might last 4 weeks. And it may not be the complete squeeze. We might get only get this share price up to $500 or $1,000, and that's not going to be all the shorts covering. We might have to hang on for another 3 months to 6 months, but we have a good potential to make a lot of money right there, wait for a little dip, and buy right back in. At least that's what my plan is. So we're going to be seeing some really fucking cool numbers, and the longer we hold, the higher it's going to go. If you see it go to 1,000 and you hold and everybody else is holding, it's going to go higher. If you see it go to 2, it might go to 4. It might skip 3 entirely. Because the computer doesn't give a shit what the price is. They have 1 hour to buy this shit back with the new Phase 5 regulations. 1 hour to buy it back. All right, to meet the margin call. And if they don't, then the DTCC and the SEC, all these guys and the SEC will come in and they will automatically buy it back with their computers. And that thing will keep buying it. It doesn't matter. So if all of us put a sell limit of 99 million or 99,000, just whatever theoretical number you want to put out there. I'm not going to give an exact number because I don't want anybody to think that I'm trying to manipulate anything, because that's not my case. But if everybody does what they want, and I know I'm going to hold, and that's what I want to do. If everybody does what they feel like doing and manages to get this price up high enough, it could just continue to exponentially rise. This is the first time in history that this has ever been possible. We could see 99,000 a share. We might see 8,000 a share. We might see 88,000 a share. We might see 800,000 a share. I can't believe that this is actually possible, but it is because of the total number of synthetics. We already exposed yesterday that there are 513 million synthetics that CITIBANK owes to Banco do Brasil. We exposed it yesterday. Other people have been talking about it, pretending those Brazilian shares are just shares. They're not. They're certificates. You need 6 certificates for every 1 share. And Citibank has to hold every 1 share for these 6 certificates that's out there. They have 3.08 billion certificates. You divide that by 6. It's in the regulations, the rules, the laws, and the paperwork filed by Brazil, the government, and Banco do Brasil, as well as Citibank. We showed those in the last video from yesterday. That's one example. There's 3.5 billion more synthetics that I've seen in other companies, just like the way that they're doing in Brazil with A2MC34. That's the name of the fake, unsponsored level 1 BDR, which means unrelated to AMC in any way. It's unsponsored by AMC in any way. And it's completely synthetic because Citigroup has their latest 13F filings state that they only own 61,400 total AMC shares. But they're supposed to have 513 million to meet their requirements by law with Brazil for the A2MC34. That's the ticker name. Brazilian ticker A2MC34. Okay, video I put out yesterday about Brazilian BDRs, or you can go and just Google that thing and just find some more information. But there's a lot of fake information about it because so many people think that it's just normal. I saw guys like Matt Kors and other guys saying that, oh, they're just shares in Brazil. It's not really a big deal. No, it is a big deal. And that's the same thing that's going on with GameStop, with these shares showing up in GameStop on these Bloomberg terminals. You guys have seen them? I'm not going to show screenshots of them. You guys have seen the Bloomberg terminals showing tons and tons of shares at GameStop? Because those are really there. Those are really there through other unsponsored BDRs, other completely unrelated to GameStop, but they're putting out these certificates. And then this bank, the Depositary Bank, which in this case for AMC and A2MC34 is CITIBANK, the same thing's going on with GameStop and all these other companies that are heavily shorted. And they're held in other companies offshore, overseas, and in other ETFs. And they've all been shorted. So even though AMC and GameStop are fundamentally two completely different companies in two different sectors with two completely different situations, there are a lot of apes that are out there holding them, around 5 million to be exact, or to estimate around 5 million. And none of them are actually selling off. So that means a majority of them aren't. So even if there's some paper-handed bitches out there that want to sell off their shares, that's fine. Everyone has the right to do whatever they want. And I encourage you to do whatever the fuck you want with your money. Don't listen to me or anybody else. You decide for yourself. You use the information that you come across to do your own due diligence and decide for yourself how long you think you're going to hold. As far as the mother of all short squeezes, I plan to hold. And when I start seeing ridiculously high numbers, I will start to incrementally sell off ever smaller, very, very small positions of options, calls, and very small positions of shares when I start seeing ridiculous numbers. For me, that's 5 to 6 digits minimum. 5 to 6 digits per share. So if that thing doesn't say 50,000, 99,000, 500,000 a share, I'm not going to sell anything. And then I'll start by selling 5% and continue to make sure it's still going up. I might sell 5% more, make sure it's still going up. Make sure, sell 5% more of my shares and make sure it's still going up. And I'll never sell them all. I'll always keep some. Even after the mother of all short squeezes, I don't care if it goes up to 1 million a share and then comes back down. I'm always going to hold a few hundred shares of each company, AMC and GameStop, because these companies matter. Pedro asked, how are they going to pay us money with no money? They're broke. They're going to go broke. They're going to pay out all the money that Bank of America has, all the money that Citibank and all these other assholes. They may not go broke entirely. They may get a loan from the government, but even then, we don't give a fuck because we're still going to get paid. But regardless, the hedge funds got to go first. They got to pay up first. They're going to get liquidated and bankrupt. And then next is going to be some of these brokers, these broker dealers. All right. And then you're going to see some of these banks and prime brokers. So you're going to see Lehman Brothers, like we did back in 2008, times 12, times 20, maybe more, like ridiculous. And then they're going to go, a lot of them are going to go bankrupt. There's $189 trillion in derivatives losses. That's 5 times the world's GDP, guys. 5 times the world's fucking GDP. Right here. This is the OCC.gov report. Again, total amount for commercial banks with derivatives. Their total derivatives unrealized notional losses are let's just say $189 trillion. It does not include naked shorts. It does not include naked shorts. So you got to add the naked shorts to that. And you got to add the failures to deliver that were reported. And then you got to add the shorts that are marked as long because they're cooking the fucking books. So you might as well take some of this bullshit measly 21 trillion they got in assets, and you might as well slide half of it over on top of this too. So they got 10 trillion to pay $199 trillion in liabilities? Nope. So take all their money, take all the hedge funds, take the prime brokers, the broker dealers, Citadels fucking money, because I know Citadels got 400 billion. Let's take that. That's a nice chunk. And then the DTCC insurance policy, $76 trillion. We're going to take all of that. Then the NSCC's got another $100 trillion insurance policy. We're going to take that motherfucker too. All the way until we hit the Federal Reserve. And then the Federal Reserve is going to print us out the goddamn money printer. Wow, I love this shit. I fucking love these stocks. I can't fucking believe this. It's going to crash. These banks are crashing our goddamn world. Our economy. They're fucking going to crash our whole economy. And we're going to get rich because these assholes are so goddamn greedy. Look at this. How are they controlling foreign exchange prices? 99%, 98, 99, 97, 98, 96, 100, 100% traded Forex over the fucking dark pools. That's how they're controlling the price of the fiat. That's why they're scared of cryptocurrency. That's why there's cryptocurrency regulations inside these motherfucking infrastructure bills. That's why China's coming out with a blockchain cryptocurrency called the yuan, which is going to be backed by gold and partially backed by gold, and is going to be running 100% on blockchain. It's going to be they're going to be the first ones to the table. They announced it in May, and they're currently almost done with it. The United States is right behind them, and they're going to try to sneak all this cryptocurrency shit. They're going to try to sneak all this cryptocurrency regulations into this infrastructure bill. It's in there now, and it's one of the many things that they're fighting about. But because of the issues with unemployment, with FEMA, with the real estate market, with the stock market, with the derivatives losses that we have, with inflation out of control, okay, with global currents that are completely dissipating around the Atlantic Ocean because of Arctic ice sheets are melting. Google that, please. Okay, that's going to kill fisheries and wildlife around the world. So a lot of people are going to starve to death. For every 1% for every percentage point that unemployment goes up in the United States, 40,000 Americans die. Somebody asks, Pedro asks, is TD Ameritrade a good place to hold shares in a cash account? I like Interactive Brokers very much. Their company been in business for 42 years. They wonderful, wonderful platform. They don't use payment for order flow. I'm not sponsored by anybody in any way. They're just one of my favorite out of everyone I've used so far. Fidelity seems good too. But recently I've moved away from things like, I've moved away from Webull, I've moved away from Robinhood and anything else like that. Long ago that uses payment for order flow, and I think anybody else that would like to continue to buy shares or options should definitely move away from payment for order flow brokers, such as and move towards guys like Fidelity and Interactive Brokers. I don't know about TD Ameritrade. If somebody else in the chat would like to drop a line and let me know if TD Ameritrade allows you to choose directly so you don't have to use PFOF, then that would be a good idea. Now, look at all these other things that they're trading all this directly over the dark pool. And this is 100% information given to us by the Office of the Comptroller of the Currency. I look at the investment grade credit. These are all those mortgage-backed securities and those CDOs. 100% of them, Goldman traded 100% of them in the dark pool for all of them. And Morgan Stanley did as well. So that's going to be a fun time, you guys. Yes, the value of these BDRs, the certificates, are 6 BDRs for every one share. That is correct. And that is confirmed 100% synthetic. 100% synthetic shares. Those are all fake. And all of these 11 tables that I showed you guys in the federal H8 report have massive, massive losses. You guys have seen the daily Treasury Statement for the United States. Cash and debt operations of the United States Treasury as of Thursday, August 26th, because the Friday one has not been released yet. They are spending, this is what they had at the beginning of the month, $459 billion. They have had on Thursday, at the beginning of the day, $258 billion. At the end of the day, $239 billion. And they're going to continue to spend 19 to 26 billion every day. That gives us 9 to 13 days. 9.5 on average, maybe up to 13 at best. We saw Medicare spending is the first thing to get cut. Farm services, USDA has already started to get cut. Medicare prescription drugs went up from 89 billion this year to 38 million this month to 0 on Thursday. Same with marketplace payments. Right here, Medicare payments to anybody in the AHS did not get paid already. Doctors, nurses, hospitals, 0% of them got paid on Thursday, and I'm sure Friday was the same shit because there's no way they would start paying it again the next day because they're trying to cut things that they are paying with these extraordinary measures. So they're not going to get paid for a year or two. Look at this. The Department of Labor Employment Benefits, they paid out $776 million. So they're still paying that. for now they're paying individual income taxes. I hope they continue to pay out on our taxes and don't put a, cause another backup on that, which they undoubtedly will. Yeah, we are in rough territory. So the government is looking like a pink elephant. Yes. Cockroach Rancher asks, am I wrong in thinking that if in a short position you can't ever get all the shares, your losses could be infinite through generations? No, because they're going to have to buy it back no matter what, and these computers will buy it back. And if that means that the price has to jump by hundreds of dollars to get to the next share that's available for sale, it will. The price will jump by hundreds of dollars. It may jump by thousands of dollars in moments. Because the difference between my share and your share, when I'm willing to sell, I might be willing to sell, say, at 50,000, and you might have yours. Yours might be the next one available, the next available share at 90,000. So we might see a $40,000 jump, for example. And I'm not saying that's going to happen. That's just an example of the way that things could move in the upward movement to reach the next higher share price that has to be bought back. Tia Clay asks, so why would hedges delay? You guys have a good point, but look at it this way. Guys like Ken Griffin makes $37 million per month. Do you think he wants to give that up? Do you think he's going to roll over and just let that go? Or do you think he's going to fight tooth and nail until he's fucking bankrupt, until his companies are bankrupt? And then he can go places like Africa or overseas where they don't have extradition. And he's got money sorted away in the Cayman Islands and other places where it can't be, given back to the United States government. That's why. They're going to fight until it's over, until it's bankruptcy, until it's margin call after margin call, and the price runs up so high that that every single one of their assets is liquidated. It's going to be tough times. For many people, blue chip stocks are going to get sold off left and right, and shorted stocks like AMC and GameStop are going to fly through the fucking roof. They're going to into the stratosphere. Moises asks, what's my price prediction for the mother of all short squeezes? We got two stocks here. They're two separate stocks, but they're held in hundreds of the same ETFs. Hundreds. Okay? So they're two separate stocks by themselves, but at the same time, they are in the same ETFs hundreds of times over that have also been being shorted in other countries and in the United States. So they don't just have to buy back AMC and GameStop. They have to buy back all these shorts positions in all these ETFs. They have to buy back all these short positions in all these offshore certificate depository receipts, such as the Brazilian ones that are 100% synthetic. We already proved it in yesterday's video. Go check it out if you haven't. Okay? So all of these ETFs have to be bought back. All of these Brazilian depository receipts, Cayman Island receipts, and certificates have to be bought back. All the shorts on them. And then they still have to buy back the billions of synthetics on AMC and GameStop. I see a floor. No. My price prediction, I'm going to give you a range, a realistic range. In my eyes, from everything that I've learned in my lifetime and everything, all the due diligence that we've done, the millions of hours of due diligence that we've done as apes and that we've shown on all of these ridiculous, Reddit post after Reddit post, of conglomerations and people working together. There's some huge numbers here, and I know this is going to sound crazy, and that's okay if you don't know what's going on with these stocks. You can think I'm fucking crazy. But for those that do understand what's happening with these stocks and have done their due diligence, I see a clear range for AMC anywhere between $10,000 a share and an easy $100,000 to $150,000 a share. I will not be surprised at all if the share price goes anywhere between $10,000 to $150,000 per share of AMC. For GameStop, I will not be surprised in any way if the share price goes anywhere between $50,000 and $500,000 a share. Not one bit. I will say, told you so. Let me click the sell button a few times, and then I'm going to re-up when the price comes down a little bit further. Because I'm going to keep buying in until every goddamn synthetic fucking share has been bought back. I will ride this thing up and up and up over and over again until we're all stinking fucking rich. Period. And on that note, I think we should end the video there because we could talk a lot more. It's been a wonderful time here with you guys. We've been going for an hour and a half, and I appreciate every single one of you. Starring Eli, Toxic, Tama, Haha, TM, Blue, Mr. Diamond Hands, Mickey. Thank you guys all so much. Hang Loose Creations, Great Beyond, Rizzo Stonks, Wired, all you guys over there, the hundreds of guys that I'm working with on Twitter and Twitter Space calls and Discord and the Reddit community. Cryant, Nafum, Jimmy, all you guys, you know who you are. I appreciate you, and so does the entire community. Charlie's Vids, all you guys, keep doing what you're doing. Thank you very much. Wrench Capital, keep it up. Amazing work. I love you guys. Jeffrey Forbes, keep doing your thing, brother, and all you cats. We're going to be seeing some fun times ahead. The futures contract cycle is here. We're about to see that hard. All the way through September 9th, they got to buy back the 2 weeks. There may not be a green day every day, but for the majority, I'm predicting we're going to have a lot more green days and a lot heavier green days than we will see on the red days. The red days and the red times will be mostly shorting for them to try to keep the price under control to prevent a margin call from coming any sooner. It was a pleasure to hang with all you guys. Thank you very much. Please hit the like button. Please subscribe if you can. I'm going to keep bringing you information. We're going to find all these other synthetic shares. I'm definitely confident that I've seen 3.5 billion more synthetic shares than we already saw. I've already seen them with my own eyes. I just got to finish the due diligence to make sure that I can get it out to you properly and explain it the same way that we did the BDRs. Thanks again, everybody. Love you, Ape Nation. You guys are the best. Smoke a blunt, have a beer, relax, enjoy your Sunday. I'm buying so much fucking AMC and GameStop this week. I am so looking forward to the next several. Love you guys. Thanks so much. Appreciate you. Thank you guys. Yes, please drop a like. It's not for me. My ego doesn't care. It's for the YouTube algorithm. Because the more people that like it in comparison to the views, the more times it shares it randomly when other people are just browsing through YouTube. So thank you again. Have a great night, my friends.